What should financial services leaders do to navigate this transition?
I think the key thing is hold the course.
Hi everyone, and welcome to the latest edition of FS in Focus. My name is Bruce Laing, and I lead Baringa's Climate and Sustainability team for financial services. Today, we're going to talk about a challenge all financial services leaders will be facing. How can they steer their firms and clients through what is becoming an increasingly turbulent shift to a lower carbon economy? With 1.5 degrees of warming now out of reach according to the United Nations, and the Net Zero Banking Alliance formally dropping the requirement for banks to set targets aligned to 1.5 degrees, how should firms think about setting strategy and doing transition planning to maximize commercial opportunities and prepare for the risks ahead? To discuss these topics, I'm joined by Evan Hirsch and Emily Farrimond, two experts in our sustainability team who work with global banks, insurers, and asset managers. Evan, Emily, welcome. Starting with you, Emily, how has the recent market volatility and policy uncertainty impacted the transition and the clients that you work with?
So for our clients, there's been a growing realisation that actually their 1.5 degree aligned targets and where the real world is currently tracking to are not aligned. So our base case tells us that actually we're on track for 2.5 degrees of global warming. We've also seen a strong narrative out of the US from executive orders around diversity, equity and inclusion, pausing of the IRA, and also challenges around tariffs affecting renewable supply chains. And then within Europe, it does feel like we've seen a little bit of a step back with the revisions around CSRD and the omnibus. So from a client perspective, a lot of change and quite a lot of things to worry about. So firstly, we're seeing them be really thoughtful about what information they might put into the public domain, not wanting to fall into any potential traps there. Secondly, then, we're seeing a real revisit of policies. So where policies have been set around things like oil and gas, exploring whether they're now valid in the new world that we're facing into. We're then seeing, obviously, I talked about the real economy, decarbonisation, and our clients' 1.5 degree aligned targets. The realisation that those may not be achievable. So a lot of thinking about whether those targets need to be revisited, and actually whether climate and sustainability strategies need to be amended and updated.
Evan, Emily's just talked about the fact that a 1.5 degree world is slipping away. What does this mean for financial institutions' strategies and targets?
A lot of financial institutions have set 1.5 degree targets, and some of those might now become much more challenging to achieve in a world that's looking more like it will be 2 degrees. But what that also brings are two real important considerations for them to bring into their business. The first is understanding what does that transition look like. So that means running various scenarios to see what that could mean for their existing business strategies, but also what that might mean for their liabilities and their investments. The second piece is much more exciting. That's how can they support their clients through this global transition. As their clients need to change their business models, the products that they're selling, insurers, asset managers, banks are in a really exciting position to help them go through these really turbulent times and can build better relationships and help those clients succeed.
That's a really interesting point. Emily, are there any other considerations?
Well, I think what we're starting to see is greater understanding of the interrelationship between climate change, temperature rise, and nature and biodiversity impacts. So that's a key priority moving forward. And then clearly, the hotter it gets, the greater the implications on people. So really starting to understand just transition implications becomes critical too.
So what do banks, insurers, and asset managers need to do to maximize the opportunity and manage the risks ahead?
So firstly, I think it's making sure they understand the risks and opportunities. And the first step in doing that really is to make sure they understand all of the climate scenarios and the likely views about how transition will unfold. So that's from 1.5 degrees and making sure that you continue to at least measure and monitor against that, through to an internal base case. So what's your in-house view about how transition is actually unfolding today? to other more extreme scenarios, such as overshoot scenarios and what they might look like. Now, all of that leads you to an understanding of, okay, what are the risks and also the opportunities under each of those scenarios, and how can you maximize those? Now, clearly, you'll have some products in place that may enable you to maximize those opportunities, but actually the risk appetite might not be there. So there's quite a lot of work to do to really start to understand some of those potential new technologies. In particular, there's some really extreme technologies in some of those overshoot scenarios. And then I think for a number of firms, their role might change slightly. So we talked, and Evan talked earlier about sort of decarbonising portfolios, but that doesn't decarbonise the real economy. So you might want to invest heavily in climate tech, and that might be your role. Equally, you might decide to engage heavily with the high emitters and really support and encourage them to decarbonise their businesses.
Evan, a lot of the work you do is with asset managers and insurers. How do these challenges differ from those facing banks?
Yeah, it's a really interesting question because asset managers and insurers have a completely different model and very different impacts from climate change. We think about insurers starting out as risk managers. Climate change clearly has massive impacts for them as they're thinking about their underwriting. We take the recent wildfires in California. The reason those were so severe is because not only were there wildfires, but the wind was going at a speed of 4 football pitches a minute. Clearly, that's really putting a lot of pressure on historical underwriting models that just aren't equipped to deal with climate change, which has never happened before. All of those models are based on things that have happened in 1 in 50 years, 1 in 200 years, and that modeling just doesn't work for them as insurers. So they need to evolve the way they're thinking about modeling risk. And on the other side, as asset owners, they need to be working with their asset managers to think about how do their assets that they hold that match their liabilities need to change in the future. How do they make sure that they're protecting their clients and their shareholders by investing in a world that will look very different and needs to have liabilities that match those new risks that they're facing in the future. That requires a lot of coordination between them and the asset managers who need to understand what that future world looks like.
A final question for you both. What should financial services leaders do to navigate this transition?
I think the key thing is hold the course. So whilst we've made a huge amount of progress, we're some way away from where we need to be. Now, what can they do to influence that? I actually think the key thing is collaboration within their industries and then collaboration with their clients.
Evan?
I think as leaders across the business, they need to be involved in the process. A transition plan can't be something that's developed by a group sustainability team. It needs to be something that all leaders across the business are accountable for and have been involved in creating.
Thanks both for those really useful insights. This has been a really timely conversation. If there's one thing to take away, it's that while the path to 1.5 degrees may be narrowing, the role of financial services institutions is becoming more important, not just in managing risk, but in providing their clients with the products and services that they need to transition. This means embedding credible, business-wide transition plans, having the knowledge to support clients through uncertain times, and actively managing your portfolio, as the direction of travel isn't going to be linear. Success requires a clear strategy, strong leadership, and alignment across all parts of the business. Thank you for joining us on FS in Focus, and we'll see you next time.